2024 could be crypto's biggest year yet. Once a financial curiosity used only for proof of concept transactions, prominent cryptocurrencies like Bitcoin are now gaining legitimacy, spoken about in the same breath as gold or oil. But fame comes with a price. The fall of industry titans, leaders of major cryptocurrency exchanges Binance and FTX, renewing fears of regulation and raising questions about its stability and investability. We asked one expert in crypto about the major factors influencing the digital currency landscape in 2024.
I think one of the most interesting trends throughout the year has been kind of this rise of a US-based institutional type of buyer, whereas historically the crypto market's been primarily driven by retail.
That was Will Clemente, co-founder of Reflexivity Research and notable Bitcoin bull.
I would say that the market is really starting to show signs of maturity. Part of that is due to kind of the washing out of a lot of the bad actors that we saw.
Those bad actors Clemente refers to? They include the one-time face of crypto, Sam Bankman-Fried, convicted of fraud in November 2023, and Binance's Changpeng Zhao, better known as CZ, who pled guilty to money laundering violations in November 2023 and awaits sentencing. And in September 2023, the founders of Three Arrows Capital, Su Zhu and Kyle Davies, were sentenced to prison by authorities in Singapore. But where such industry titans fell, more traditional market participants are now starting to take their place.
And throughout this year, I think you're starting to see kind of this regime shift in the type of market participant that's now dominating the space.
Clemente points to the rise in trading activity from the US compared to those in Europe and Asia Pacific.
What you see is that throughout the entire year, you've seen the US has really been driving this thing up.
He sees more US-based traders active on exchanges like the CME. Traditional hedge funds, meanwhile, are making inroads into crypto.
And then the last thing I'd add as well is just the performance of things like Coinbase and MicroStrategy relative to some of these kind of very native, deep in the weeds crypto assets. You're really starting to see this rise of this type of institutional US-based market participant, and I think that carries over into next year.
The end result? Institutional investors are starting to think about using cryptocurrency as a tool used to diversify portfolios, similar to how traditional commodities like gold and oil act as safe havens and stores of value.
There's a large, stamp of legitimacy that's put on Bitcoin and other digital assets, but Bitcoin in particular, by BlackRock, Fidelity, and some of these very large, institutional firms kind of putting a stamp of approval and saying, hey, look, we feel comfortable offering this to our clients.
This legitimacy includes ETFs proposed by institutions like BlackRock and tied to the spot price of cryptocurrencies like Bitcoin. Such spot price ETFs are pending approval from US securities regulators.
I think there's a very, very high probability that the ETF gets approved. And, I think there's a high probability that after ETF approval, you see continued kind of institutional activity around BTC, partially just because of compliance and regulatory reasons. They're able to get money into the asset in a way that maybe they feel comfortable doing so for the first time.
But if you're expecting institutional involvement and the removal of bad actors to bring calm to a volatile asset, think again. The Bitcoin halving is just on the horizon.
Bitcoin has a fixed supply, but as you just alluded to, one other thing to keep in mind, in addition to the fact that it outright has a fixed supply, is that the rate of issuance also declines every 4 years via something that we call the halving. So upcoming, and it's estimated to be around April, we'll see the supply issuance gets cut in half.
Bitcoin, as set up by anonymous author Satoshi Nakamoto, is designed to have a fixed supply and is mined by calculating a proof of transactions with a reward. To reduce the rate of mining, that reward for miners built into Bitcoin is cut in half in predictable, roughly 4-year increments. Clemente says the next supply event is set to happen in April of 2024. That halving could drive up the price of Bitcoin, according to Clemente.
I think just from a raw supply-demand standpoint, you have less supply coming onto the market. Even if demand stays the same, price starts to drift upwards. And I think that kind of ignites some of the momentum that starts to ignite kind of this reflexive move up that we've continued to see for Bitcoin following the halvings in the last couple cycles. So in this recent halving in May of 2020, we saw kind of price action following that, which was also largely due to the tremendous amount of stimulus that got pumped into the economy. we can go back and look at how Bitcoin behaved after the 2016 halving as well. And I would expect if this trend continues, we see similar price action following this upcoming halving, because the way that a lot of Bitcoiners like to describe it is this is essentially kind of a supply shock on the market, where the total amount of supply that's coming on gets cut in half.
But volatility comes with the territory for Bitcoin and other crypto. What matters is its use as a potential portfolio supplement to, or even what Clemente sees as a replacement for, commodities like gold and oil. Regulation, meanwhile, is the final piece of the puzzle.
I do feel favorably about regulation coming into the space. I think it's necessary. I do think regulation will continue to clamp down, and I think it's a positive for us to kind of move forward and mature as an industry.
Increased regulation means more confidence from investors in crypto, a key step in seeing crypto become a serious investment asset.
I think we're starting to turn a new page in terms of not only the types of buyers, but also the rails in which the industry operates on, moving away from kind of this wild west of crypto towards this more kind of regulated, traditional financial friendly world.
For Investors Business Daily, this is Mike Zhuang.